lot different are those markets, so Wendy's helping us sort that out.
Thank you very much. Hey Jim, those numbers look like what the stock market just did.
Yeah, that's right.
Oh, sorry to find this funny. You have to find some levity in the situation, and that's what Jim's here for today, to tell us where the bright spots are in the midst of all this. Because what's happening is people are picking up the papers or looking at their bank statements and feeling physically ill. How can you reassure everybody? What should we be doing right now? Is this the time to buy now that stocks are so undervalued, perhaps? What do you think?
Well, I think common sense says you got three strategies, right? The first is you get out, and I'm not opposed to that strategy. I know a lot of financial advisors are going to say, don't get out, buy and hold, keep long term. But, at the end of the day, you shouldn't be surprised at what's happening. And if you are surprised, then maybe you're really not a market investor, because this is going to happen again and again and again. And there's an old saying, it says, if it's too hot in the kitchen, you might as well get out. Now, may not be the best time to get out, but option one is to get out. My only caution to that is make sure you're not getting out for a while to get back in, because what you're essentially trying to do is market time and try and get back in when things are better. But chances are you're going to miss it. So.
Now, would this depend on what stage of life you're in? For example, if you're 60 right now versus if you're 30 and have 30 more years working ahead of you.
Yeah.
So from those two standpoints, what would you do?
Yeah. If you're younger, the answer is stay put or even buy more. This business, the stock market, is the only business I know of that when something goes on sale, nobody ever buys. You look at Boxing Day sales where people go through crazy behavior. They, camp out overnight in the middle of winter.
That's right.
Here you've got an opportunity to buy something that you're going to need long term, and the price is now lower than we've seen it before. So why not buy? But yeah, there's definitely concern the older you are, but common sense also says that the older you are, the more conservative you should be.
Right.
Where I think that this creates a lot of concern is somebody who's actually drawing income off of their portfolio. So I would say that any retirees who are taking income off of their portfolio, you should really call your financial institution, your financial advisors, and make an appointment right away, because this kind of volatility can be very, very difficult on a portfolio. Because when you're pulling income out, it makes it that much more difficult to make back those losses.
Well, and that's the thing too, and you look at it, not to be further discouraging, but let's just say you've lost 30% out of your portfolio, okay? 30% is gone. It takes far greater than 30% to make it back, because if you had $1,000, for example, you lose it, you're down to $700. Okay, so you need to make 30%, 50 or 60. Yeah, 30% of 700 only brings you up to about 8 something or 900. So you're going to have to make that much more. In that case then, so if someone's watching at home thinking, okay, I'm watching my numbers slip, I am doing this, did they get into some GICs at this point? I mean, I know that's so boring, it's not sexy, but at least you're guaranteed returns. What do they do?
Yeah, I mean, if you're older and you're a retiree and you're concerned, you really have to look at the portfolio again, okay? And what I say is it's not the best time to look at the portfolio, but it's the most likely time you will. If you're concerned, you're going to do it. There's 3 things you need to look at. Number 1, you need to look at the risk in the portfolio again. You revisit the asset allocation. Because if you're drawing income off of this, you should have been more conservative in the first place, right? But now it's too late, and you don't necessarily want to pull out when it's really low. The second thing you want to revisit is the quality of the holdings. So we often talk about buy and hold and hang on to investments. Well,
know when to cut bait.
Well, yeah, but there's good investments and there's bad investments. There always has been. And if you buy bad, or the term I use, if you buy crap and you hold crap, you'll always have crap. And that's not a smart strategy. So you have to really take stock of what you own and why do you own it, and does it really represent some resemblance of quality.
Okay, we're going to hold you right there because we do have to take a break, but we'll be back with more right after this, so stay tuned.